Hello, this is Mike Swanson of WallStreetWindow.com. And I want to talk with you this weekend about what's going on in the stock market. I talked with you last Sunday about all these triangle patterns that were inside the NASDAQ 100 when it came to individual stocks. These are short term continuation patterns. Typically, they'll lead to a rally. They don't really have any suggestive power, though, of whether you're going to rally for weeks or just a few days. They're very short-term continuation patterns, but they turned out to be valid because the stock market last week did go up into Thursday, in which it had some weakness, but then Friday, the bulls came back in and the market finished for a high for the week. In fact, the S&P 500 was up almost 2%. It was like 1.7%. Now, one thing that is happening with this rally is we've got to look at the stocks that are leading the rally to determine whether this is that can tell us whether this is a short-term rally or something that's brand new with the market that's going to lead to gains for months on end. Now, when we'll get to that, it's going to be an important part of this video. But to get to that, you have to understand that the Wall Street Journal had an article out this weekend basically saying that the individual investor is back when it comes to being an active trader in the stock market and even in the options market. More individual small investors bought call options so far in August than institutions and professionals. Individual small traders have bought $1.35 billion in stocks every single day so far in the month of August. And you've got to go all the way back to when the stock market peaked in January to see that big a buying coming from small traders. Now, they're doing this while an analysis in this article done by an independent research firm analyzed individual accounts among many stock brokerage firms, and they found that the average account is down 21%, down much more than the stock market is. And I would say, and I don't think that's a surprise because me and you have looked at what the holdings of the Robinhood account people are. Robinhood gives a list of the top 100 most widely owned positions, and they're extremely speculative stocks for the most part that did very well in 2021 and 2020, but then when the market peaked, they crashed. And such holdings of extreme volatile stocks typify the holdings of such funds that are widely popular now, such as the ARK ETF held by Cathie Wood. Now, what the article did was they interviewed a couple people that were saying, I was a little uneasy about the market, but now that we're seeing this rally, basically, I'm getting back in. But what are they getting back into? What are they buying? They listed the number, the top bought stocks. Well, where's all this money going? Tesla was number one. AMC was on the list. And someone interviewed an article said they're getting back in AMC. Someone else said they're piling in to Norwegian Cruise Lines. Well, these are stories of two people in the article. We can see more information. Let me load up my screen and share with you some of the things I look at. We'll look at some of the charts here. But this is the Fidelity orders by Fidelity customers. You can get that, if you type that in Google, this will come up. This updates live, and it shows us. This was the close Friday. What were the top buys and sells with the ratio of buy and sell orders? Tesla was the most traded stock. AMC number 2, Bed Bath and Beyond number 3, an obscure company, Twin V Power Cats number 6, Forza times 10 Incorporated. I had to look that one up. It just IPO'd. RIVN on the list. RIVN is a really sleazy company with you can find all kind of crazy stories about it, but the stock's been a complete disaster. But we'll look at the chart. We'll see why people are now buying it. Unity Biotechnology, GameStop, Embark, Tencent Holdings, Global Foundries, Direction Small Cap Shares. This data shows us, what people are doing on Friday. And what I see, and this is a point we're going to return to towards the end of the video, because it's so important. What I see, not just in the Wall Street Journal article, but in this, is that what people are basically doing is trying to buy the plays that were hot in 20 and 2021. And even if they had been in collapse up until the market, this rally began towards May, up until that, these stocks are leading the decline. Now they are leading the rally and people are piling in. What that would suggest, and on one hand, is that a lot of this is short covering and speculation. But when we look at the S&P 500, we can see that it closed Friday above the 150-day moving average, and it's now likely to test the 200-day moving average. I don't think this rally is going to go on all year. The fact that these type of stocks are the ones leading it is a sign to me that this is very speculative, as I said, short covering. Typically, when you see a new bull market, which is what people are trying to claim this rally is, it's led by new sectors, new stocks, new leadership, not the fad plays of the bull market, ninth inning in. So that doesn't mean this rally is going to end this week. I think it can continue into the end of this month and possibly into the next Fed meeting. We'll have to, look at this week by week and see how this all unfolds. But let's look at the charts of some of the, most traded stocks this month. As I said, Tesla number 1, and you can see, it chopped around, broke 750, and now it's gone up to 950. And people are soaring, throwing more money into that stock, small traders, than any other stock. Now, what's funny about that is last week, Elon Musk announced that he's selling close to $2 billion of his own Tesla stock. He made a similar announcement in the first quarter and also at the end of last year. He's a big seller, but the individual traders are stepping in and buying his shares. That's what's going on. AMC catching the interest of many. And look, AMC has gone from $10 to $25. That's a highly volatile move, and it attracts a lot of trading. Best Buy, a stock of a company that could even go bankrupt, and it was crashing, like that. And what did it do? It went from July to 12. In some ways, action like that, and the fact that it's AMC is reminiscent. It kind of reminds you of the first quarter of 2021. And in sort of sense, the people that are doing this trading are doing the same type of trading that was going on now, which lasted at that time. There's a run in these stocks that lasted like 6 weeks. So that's kind of what I think people are trying to replicate, trading these things. And I would say the same thing goes when we say, Rivian is on the list, that Fidelity list. Rivian is one of the most highly valued stocks in the market. It loses billions. It announced last week it lost over $1 billion in quarterly earnings, but it fell to 20. After peaking around 180, it fell to 20 in May, one of the worst performing stocks, period, making more losers than many stocks. But it's since rallied from 20 to 40, over 100%. That attracts speculators and buyers, but it's still way off its highs. And in the big scheme of what the stock's done, a move from 20 to 40 really doesn't mean anything when the stock was at 180, a year ago. Carvana, another stock on the list. That's the one I was saying has got really, questionable, seedy things going on with the company, the management. But same story. It was close to 375 when it IPO'd, fell below 25. Now it's at 50. People are playing that momentum, and it's that short-term momentum game that is getting, small traders, the meme stock type player, back into this market like they have not been all year up until now. How long can this last? How long can their cane keep going on? I don't know. Frankly, it's not a game I play. I like to get into trading positions and investment positions that I believe I can hold for months. If all goes right, years. And I don't think this is a moment in the market for that. This is it. It is a moment for short-term trading. The triangle patterns last week worked. You can look for short-term trading patterns. For example, here's NVIDIA with a short-term trading pattern on it. If the rally continues, this pattern can materialize. So what pattern am I talking about? Well, we can draw a simple resistance right on the recent highs, and we got a nice triangle pattern right there. Right here, simple triangle. If that materializes, you break above the July high, you're popping up into the 210, 230 level. That's a nice short-term move. Is this a stock to invest in? It's still, lagging the stock market average. It's, while the S&P's gone above its 150-day moving average, the red line, NVIDIA is still below it. But if you want a short-term trade, a triangle breakout can last 3 to 5 days. So that's the kind of action in this market. And it's also why people are piling into options. So that's what's happening. I want to give you an update on the market. If you are new to my content, hit the like button. I do videos on news, history, real estate. If you want more stock market, hit like. If you're new to me in these YouTube videos, hit the subscribe button, hit the bell next to it. YouTube will then send you an alert as soon as the next video is up and for you to watch.